That's right. Last week, it was coffee. This week, it's whiskey. Now, every day was green just because it's whiskey. Doesn't mean it was bad, but I tell you what, you had to put a lot of effort into it. As I said, every day was green, only one red day this month. So before I start with today's stock market muttering trade review and recap, visit thelincolnlist.com, click on the trade room tab, and you can start trading with us right away. Now, speaking of whiskey, some of you have been responding, hey, whatever happened to happy hours? Well, I started doing these mutterings every day, and it just didn't seem like a lot of people were that interested in happy hours. So I just kind of said, well, let's go with this for a little while. And this takes up a lot of time, obviously, for me. Maybe not for some millennial that's really good with using computers and editing and doing all that stuff on the fly. But for old Dougie here, yeah, it's a little bit difficult. But because of the requests, here soon, I don't know exactly when, maybe next week, maybe the following week after that, I'll start doing some happy hours. So while I'm at it, send your questions to support@thelincolnlist.com and we'll start getting back into that. Now, as I said, every day was green, so I can't complain about that. And today it was another kind of like the repeat of what we've been seeing, just really tagging on heavy on some of these shorts and just getting really huge moves out of these. So if you go back, again, I say this almost every day when we start these mutterings. At the very beginning, I say the plan has not changed until it stops working. And that is shorting into strength and buying into big time weakness. Now, today was one of those days at the beginning, I'll give you whatever, like, I swear, I was a bit confused because we kind of gapped up and started with that melt up sort of feel, which was kind of weird. Let me open up the SPY here real quick before I start talking about Netflix. SPY. Okay. So here was the deal. You had a pretty solid move here this morning. And what's been interesting, like I said the other day when we had the rally, I can't remember exactly which day it was. But it's like usually when you're in this period of severe volatility and the market's going back through it. Of course, the closest time I have to draw from is back in February. But normally you have volatility even on bullish days. So that was kind of odd there a few days ago. Maybe it was a week ago now. Again, I don't exactly remember the day. That we had that big old 500-point melt-up day. Now, it's one thing to anticipate a rally, but to see something melt up or all of a sudden everybody wakes up one day, volatility's gone, and they're back to just melt-up buying, that's weird. And it kind of felt like that today. So this market starts ripping up here and, it goes up quite a bit. And it just continues to get bought. Like every dip is getting bought. So like about 1 hour in, I'm like, are they going to do this again? Like, are we going to go through this whole melt up thing? Now, I said we were short into strength and then buying into weakness. So the first thing I went for here was Baidu. I missed my good old buddy Baba. King Baba should be my new name. It used to be Doug Digley. I might end up changing it to King Baba. That's just a joke. But I got into this Baidu because it was up. And I have to say that there are a handful of stocks that just cannot keep up even when there is a market rip. And right now that is like, I'm just talking about what I'm looking at. I'm sure maybe you're looking at something different. I want to say this is the only stocks. But Netflix, NVDA, Baidu, Baba, I'm sure there are plenty more, but those are really the top four for me. Just cannot catch a break to the upside. Now, at some point that will change, but right now those are shorts on every single short-term pop, short-term rally, because they just can't hold, especially NVIDIA being upgraded earlier by GS, Goldman Sachs, and then selling off. That's just nasty. So anyway, let's go back to, Baba had already kind of rolled over, so I snuck over to its buddy here, Baidu, and I got a little short here in this Baidu. Now, once it pulled back here, it started just kind of haggling around here for 20 minutes, and the market's still kind of clicking off. So I'm like, look, I'm not going through this, because the other day I got stuck in shop, which pulled the same kind of stunt and went up the whole day with no pullbacks. And then the next day it gets smoked for like $12 to the downside. So I'm like, look, I don't want to get into a point where I underestimate what a potential rally could be. You always have to think, look, we're down so much, we're around this 200 moving average. At any time, we can rip 500 points. That's nothing at a point like this. So when you get stuck in a short, or I don't say stuck in a short, but when you get into your shorts like that, if they're not working right away, the market's continuing to make highs, sometimes, in most cases, it's going to be better to just be safe than sorry. And if you are wrong and it does kind of shake you out, just go back in. Hell, commissions are only a couple of bucks these days. It's not a big deal. So anyway, I got out of this trade and that was it. Now, one of the issues I have personally as a trader, and one of the tendencies why I have a tendency, to fight with trades sometimes, is because I don't go back in. I can forget about it. I start looking at something else. I start working at something else, and so on. So that was kind of like Baidu. It really wasn't much. This is my actual journal and writings, by the way. So it didn't give me too much there. And then I kind of messed around with this PG. So let me give you kind of like the crappy trades here. Because like I said, this is not all about me just talking about, hey, look how much money I make. I'm this great trader. I'm flawless. Because I want you guys to understand the professional traders that do this for a living, we screw up too. In fact, we probably screw up as much as you do. There's just these one or two small decisions, and that's why I'm here telling you this. I messed this PG up. Plain and simple. I take full responsibility for it because I got a short in here once things started to sell off in the market. This is an earnings winner, had grinded up, got a little bit of red, and I got a really good entry too. I was only 50 cents off of highs. And as the day progressed, again, this is my mistake. As the day progressed, I completely took my eyes off of this. Now, one of the things I do, because some of you new traders may say, how do you do that? Well, I don't look at my P&L, and the reason I don't look at it is because I think if you stare at your P&L, in most cases, it has a tendency to influence your decision outside of technical analysis. So, I mean, we've all been in a position where we looked at P&L and we let that dictate to us either our exit of that position rather than what is the chart telling me. So because of that, I remove all P&Ls from my screen. I look just at the stock, but sometimes because of what I do, working with the trade room, other traders and stuff like that, I admit I do have a tendency to forget about having positions on. And this was one of them because I did have a dollar gain, and by the time I turned around, it actually had snapped back. Not really snapped back, but it kind of grinded back and moved back into my break even. And before the end of the day, I took a loss on it, albeit a small loss, but still, to me, I have to admit to everyone, that just pisses me off. That's frustrating because, there's no excuse for giving back a gain like that. It's okay to try to like hang in there for a little while, but at some point, if it starts to press back after you've already had a dollar, look, you got to take what the market gives you. You're not going to get 10 bagger every time to the downside or a monster trade. So this is totally my fault. And again, I say these things unlike other people who are in the service business. I let you know these things are real because we go through the same things too. We make mistakes. We're not perfect. I don't know everything about trading, and I make bad judgment calls here and there too. So this was my bad. It was a winning trade that turned into a loser. So I take responsibility. No excuses. That falls on me. This brings me to the king of the day, which was Netflix. So these beta names have really been the kings, in my opinion, for shorts. And I'll tell you why. First of all, like when we talk about NVDA, when good news becomes a negative for a stock, what else are you going to say? So like in NVIDIA's case, it had that big upgrade, gaps up by GS. Now, if this would have happened last year, NVIDIA would have gone up $25 in a day. Now it's actually selling off the gap and going red. I mean, what does that tell you about the market tempo, how the market's acting? Same way, this Netflix, let's not forget, this thing ripped $65. We've been talking about it all week. It ripped $65 after earnings, and then it completely gives it back over a couple of days. This thing is now lower than where it was after that 65. I mean, this thing was $400 3 days ago after earnings, and now at the close, it's $331.50. So you're talking almost $70 of a retracement from post-market highs. Post-market highs after earnings. I mean, again, we talk about technical analysis as being one thing, and that helps us isolate entries. But there's also an element for a trader that comes into, we talk about common sense. It's like, what do you need to know? Explain to me in your words. Like, look yourself in the mirror for any stock that you're in. Try to make the bull case for Netflix in a short term. Now, maybe long term, if you're a long-term holder, that's a whole different story. We're talking about day trading. Look yourself in the mirror and try to make a bullish case for this. You don't have one. And today you got a couple of taps up here towards highs. And it's like, look, this thing does not want to go. So the first thing we do is we short into this, like I said, shorting into that strength early. And again, I want you to understand you won't get hurt on a short if you use stops too. Like, you know, some people say, you know, they always try to make you feel like, well, the stock can go up to infinity and you'll get murdered. Only if you keep it. You can use stops on that too. So we had a couple of taps up here. Just take a good look at this chart. You had not quite a triple top, but you had just a little bit of failure right here at this 355 after the third time of trying to get to highs. So 3 times this thing tried to break through highs. It was already up $6 or $7, I think it was. Don't quote me to the penny. But it starts pulling off, and I'm like, look, I'm shorting this because right now, this is what we look at as traders. It's not so much about winning and losing. It's about risk versus reward. So in this case, you say, look, I can short this thing at 354s, 353s, and I can put a stop at 355. I'm risking $2. And everything else around me is just dumping. If this thing just slightly pulls back, you know, I can get, then maybe it goes red. So I'm giving up maybe $2 to make 7 or some ridiculous ratio like that. To me, that makes sense. Even if the trade doesn't work, to me, that makes sense. And that's exactly what we did. It rolls over here. We cut half of it, which I've been doing. Now, one of the reasons I switched to partials, if you don't remember, is that this market has such exaggerated ranges to the downside and to the upside. So normally when it starts flushing out like this, I like to take half and let the other go for a little while because we're starting to see these extended range moves. So anyway, let's get back to this trade. It rolls over nicely, cut half, and then it just kind of haggles around here, and then I get rid of the rest. So it was a really good trade there right off the bat. And oftentimes we say to ourselves, oh man, you know what? I left a lot of money on the table. I should have kept it. Well, it goes back down a lot further. And yes, I missed this entire amount. So, you know, I'd love to have kept the position, but at the time it seemed like the right thing to do. The technical analysis was telling me it was the right thing to do to take it. It was a really, really good gain. You know, it could have gone, even though it went down further, it could have been like PG and come snapping back on you. You never know. So I was a little bit disappointed, but rather than get frustrated, guys, when things don't work, just kind of take a step back for a minute, take a deep breath, and then just kind of reorganize yourself. And this is what we did. So we're like, okay, well, maybe something else will come by a little bit later today. And it did. If you look here, about midday, you have this triple bottom, which at one time was a triple bottom. This is what this thing looks like, okay? Was right here at this point. This thing had made a rally, went back down to the lows, made another rally, and comes back down to the lows at this 340, 339s. So this is something I don't normally do because over the last couple of years, shorting down in the hole or shorting at low a day has been a disaster. But now, you know, hey, the market's different now. With everything just melting around us and this thing unable to bounce after such an enormous sell-off, then I can tight stop this. So what we were looking at is, here's what you're really looking at. You get your first bounce off of this 339 and you make this nice spike. And then within about 20 minutes, it retests that low and makes a double bottom. Then it bounces again. But what you really notice here for new traders out there is that the next time that it makes this bounce, it's a much lower high. So that means that this high right here was lower than the previous high because this high right here was 343.70. And then this high was 342. So it failed to get back to that other high. Now, if it would have traded back up to 344 and then went higher, then maybe you're talking about a bounce play. But because it got rejected and made a lower high, then it comes back down. It's just telling you, it's sort of like a slinky, right? Like a slinky going down a staircase. It's like, you guys remember those slinkies? Anyway, I said, look, if it goes under this 339, I'm in. I'll try it. I'll give it a shot. $1 stop, $2 stop, or something like that, because it just does not want to bounce. If it bounces, then good for you. And it didn't. I mean, it just gets washed out. Same thing. Took half down here at 351. Covered the other half there a little bit later in the day. I mean, that was a big, big winner right there. I mean, that trade right there itself made the day. And this is just the market we're in right now. This is something that you'll have to learn to do. And what helps with having experience and why trading takes time and you need the screen time is you need to see this stuff happen because you change the way your strategy never really changes, but your approach to your strategy will change. and the market dictates that. So that's the kind of market we're in. These things are bounces. I mean, it's shorts on every bounce right now until this market can click off a couple of solid days. Until that happens, then we're going to continue to see this type of volatility, and you're not going to get those consistent runs. So as we look back at the week, it was a really good week of trading. Every day was green. Of course, we could have made more money, right? But we also could have lost money. So I got to be happy with that. There's only one losing day this whole entire month. So I got to be happy with that as well. That's really showing some solid consistency. And the numbers look good. So that's kind of like how you really make money. You're not going to nail these big trades every time. You're just going to have to take what the market gives you. Some days will be really good. Some days won't be so good. But you just keep chipping away at what you do. And over time, that consistency will pay your bills, give you the skills to pay the bills. So I'm going to leave it at that because it's a Friday and I'm out of here. Maybe I'll have me a little bit of more of Talisker. I'm exhausted, guys. I mean, I am tired. This is what happens when you get older. You just get tired. Just get tired. Put all your effort into something like this. It's time to relax. It's time to enjoy the weekend. As always, if you guys need help with your trading, visit us at thelincolnlist.com. When Monday comes around, we'll talk about some of the other trades that we're looking at and some of the stuff setting up for Monday. And don't forget, I'll be doing another happy hour, but visit thelincolnlist.com. Click on that trade room tab and start trading with us. How about a cheers? Cheers. Enjoy your weekend. I'll see everyone again on Monday. Trade well.